Welcome to ALAQA, a podcast about the relationships shaping systems, capital, and the climate transition. This special playlist is developed in partnership with Change Now. It brings together conversations with fund managers who presented on stage during Friends for Change, and with investors, operators, and thinkers navigating the tensions of impact, climate, and finance. Today, I'm joined by Marcel Zuidam, CEO of Triodos Bank, one of Europe's leading banks in sustainable finance. At Triodos, Marcel leads the bank's mission to make money work for positive change, financing progressive entrepreneurs while pushing the financial sector towards greater transparency, resilience, and sustainability. Before joining Triodos in 2025, he held senior leadership roles across mainstream finance, including CEO positions at NN Bank and Lloyd Bank, giving him a rare perspective on both conventional and regenerative models of capital. In this episode, we explore what it really means to finance change and change finance, from the myths still embedded in mainstream markets to the deeper question of how capital can serve societies, ecosystems, and long-term resilience rather than short-term extraction. We also discuss democratic guidance in finance, the tension between urgency and patience in systems change, and why the future of sustainable finance may depend less on efficiency and more on trust, diversity, and collective purpose. Hello, Marcel.
Hi, man.
I'm very happy to have you on the ALAQA, and particularly for this special season in partnership with Change Now. We have been really lucky to meet on Change Now, a session which was fascinating, at least to me, and I believe to the audience as well. And that's why I felt this conversation needed to be a bit more expanded over the podcast, and that's why I reached out to you, and I'm very grateful that you accepted to take a bit of your time to join the show. So thank you, Marcel.
Thank you for having me on this nice podcast. I look back on the great time at Change Now as well, and very good to see you again.
Thank you. So let's start right in. Marcel, ALAQA is a podcast about relationships seen as infrastructure for change, and relationships are embodied by humans, right? So how about we start with your story? What paths, personal or professional, brought you to the work you do today?
I didn't start out with the ambition to finance change and change finance. To be honest, early in my career, I worked in mainstream finance, and it was intellectually interesting and high performing, but increasingly I felt a disconnect. We were good in optimizing financial returns, yet strangely absent from the real questions. Questions like, what is capital actually doing in the world? Who benefits and who bears the costs? And what brought me to Triodos was the realization that finance is never neutral. Capital always takes sides. Either it reinforces the status quo or it helps to unlock change. And I wanted to work in a place where choice was made consciously. And yeah, I can say as CEO at Triodos Bank, you stop seeing the financial system as an abstract structure, how it shapes livelihoods, ecosystems, and intergenerational choices. And that is a responsibility that will stay with me for the rest of my career. And after a year at Triodos, I can truly say that I have a sense of belonging here.
Well, that's excellent to hear, Marcel. More specifically on relationships, do you have in mind an example of one relationship or a turning point, perhaps, that shaped how you think about capital and systems today? Not specifically diving into all the good work that you do at Triodos, but you yourself, like in terms of thinking about capital and systems.
For me, two things stand out that has shaped this thinking. And first is actually close to my first answer. So my personal view on the role of capital has shifted. It should help in aligning our fragmented systems to shape a sustainable and competitive economy of tomorrow. Finance, regulation, and civil society, each is trying to solve their part of a problem, often in parallel. And I realized that capital flows through all of them can be a bridge, but only if we allow it to slow down, listen, and serve long-term value instead of short-term results. And the second was not so much a turning point, but about my work at Triodos. It came through my visits with entrepreneurs that fueled this thinking.
The connection to reality.
Yeah, the change makers in the real economy. And if I can pick one example, an organic farmer reshaping an entire food chain, connecting the rhythm of the land with the rhythm of the market, Those types of examples of entrepreneurs really fueled my thinking and my conviction.
It's very interesting because you see a lot of people that we had on the podcast talk about the first part of their professional experience in finance. And same for me, I used to be a special situation investor. So I was absolutely, and perhaps one of the riskiest parts of finance. And then there's very regularly, just what you described here, a moment where gradually the connection or the disconnection to reality becomes too wide. So very interesting example that you shared. Thank you, Marcel. So let's dive into the meat of our discussion, which is, changing finance and so on. So my first question, Triodos Bank has a vision to finance change and change finance. I love how, I know the sound of it. I know the melody of this, but it's a big task. So how do you at Triodos aim to do both?
It is a big task, and our contribution is indeed dual. We finance change and we change finance. And how do we do that? On one hand, we aim to be a front runner in our financing. So from an impact perspective, we enable entrepreneurs to advance new technologies and social practices in the real economy. For example, we financed the first wind turbine in the Netherlands in 1986. And now we seek to fund small and mid-sized community-based clean energy projects like Solar for Schools in the UK, Virgin in Spain, Trice Energy Collective in the Netherlands. And within the bank, we identified 5 transition themes for which we have a long-term impact vision. And these are the food transition, the energy transition, resources, and societal and individual well-being. And we try to further those transitions through impact financing. On the other hand, we acknowledge that we cannot do this on our own. There is a need for structural change. We need to change regulation, norms, and beliefs to inspire true transformation. Because social and ecological sustainability shouldn't be optional only for frontrunners. That's our belief. It is the only long-term viable strategy to sustain our planet and societies. And this is why we also seek to contribute to changing finance as a whole. And that is why we came up with a vision which we try to make reality through thought leadership and advocacy, including directly influencing policymakers. Let me start by saying that what we are advocating for with our vision on the financial system is not a reaction to what is currently happening in the world, but something that we have been advocating for 45 years already.
Although it's absolutely relevant to connect what is happening today with your long-term work. However, thank you for stating it because, and I'm explaining it to our listeners, thank you for stating it because some people in the financial industry are starting to connect the dots now between energy transition, strategic autonomy, resilience of societies, cost of living crisis. They're just starting to realize it now. But I'm happy that you underline the fact that you've been working on it and making those connections for quite some time. You didn't wake up yesterday. So thank you. It's never too late, but you've been doing the hard work at Triodos for quite some time. So thank you for saying it.
No, absolutely. Thank you for the recognition also. Because Triodos Bank was founded to finance change and change finance 45 years ago, indeed, as I said. It is our mission since our origin that we want to make money work for positive change in society. And perhaps that is needed more now than ever. And of course, the current geopolitical situation we find ourselves in is underlining that even more. But we have already been witnessing that our planet and societies face these interconnected challenges for a long time, like climate change, pollution, resource scarcity, the ongoing loss of biodiversity, and the rise of inequality. And we conclude that the great pressures on our planetary boundaries and social foundations are all rooted in our economic system. And to solve these challenges, our economic system needs to transform as well. And we know that we need to reduce our energy dependence and build a more resilient economy in Europe. And that implies that we design a circular economy that transforms our energy system and especially phase out fossil fuels, further the plant-based protein transition, and build more inclusive societies, for example.
So, we hosted a number of conversations here at ALAQA with the practitioners who work for quite some time around systems. And I'm not saying in systems change, but around systems change, who keep on repeating over and over there's this idea that you cannot fully control or change a system directly. You can only influence it, participate in it, and maybe even dance with it, on the idea of Donella Meadows and dancing with systems. So how has Triodos developed all the practices that you've been talking about with that humility in mind? Because as I said, the systems practitioners and experts keep on telling us you cannot decide that you're going to change a system and it will magically move. So how do you practice this humility?
No, clear. So humility for us starts with recognizing our own limits. So we don't assume that because we have a strong vision, it will automatically prevail. So we focus our efforts where we believe change is both necessary and plausible. And it's also about accepting that the progress is iterative. You rarely get to redesign the whole dance floor, as you call it, at once.
I'm not the one who called it. It's Donella Meadows.
Yeah.
It's not me, yeah?
No, okay. I'll take that. So you don't get to redesign the whole dance floor at once, but by changing the steps, the rhythms and expectations, you can eventually change the dance itself. And in the end, Triodos and everyone who's listening today have danced with the system. And it is our deep belief that it should and can be changed. No single actor can change such a system alone, but all can contribute. Because also we built the current system as well, like we're in ourselves. So through making explicit what we think should change and trying to convince others, both in private and public, of our ideas, we try to play a role. And of course, you have to be strategic in what you advocate for. So we tried to focus our advocacy on fundamental changes for which we see a chance of success.
No, the concept of targeting leverage points, intervention points is very similar to what you just described about finding the sweet spots of advocacy and intentionally focusing your energy on them. Absolutely. So coming back to advocacy, in your view, what is broken in the current financial system? What are the biggest problems that you identify today when it comes to serving the real economy and ultimately supporting life as we know it?
Yeah. Let's name 3 problems today, Mim. Firstly, finance has grown very large, but not more useful. Over the recent decades, finance has expanded far faster than economy it's meant to serve. International evidence shows that the global balance sheets and private net worth have surged relatively to GDP, driven largely by asset price inflation rather than new productive capacity. So credit grew too, while intermediation layers multiplied. But capital increasingly circulates within financial markets rather than reaching the financing needs in the real economy. Think about the energy transition, affordable housing, nature restoration and social care. And that is the first problem. Finance should be building the economy of tomorrow rather than extracting value from what is already there.
If I may, building on your point, just this morning on the radio, it's May the 7th, 2026. Okay, just this morning, I heard an interview from an economist who was discussing how the traders in the US are making money out of the volatility of the ups and downs and the stop and goes of what is going on in the Hormuz Strait. And he was explaining to regular audiences on the radio show how essentially the whole making money was just playing with volatility and not at all trying to feel useful and funding valuable sources of value creation in real life. So fantastic case study of exactly what you just described. It's not useful, it's floating, and it's extractive. So thank you, Marcel. Yes.
I think this is absolutely spot on. So thank you for bringing this up today. So my second problem is that the system has become too concentrated and thereby has risks of not being stable and resilient anymore. And we all know that a number of major actors in the world dominate global asset management. Card payments in Europe are primarily controlled by a very limited number of US-based international schemes. And in several EU countries, a handful of banks hold the vast majority of sector assets. And concentration in markets is never a good idea. Without competitive pressure, private profits often increase while costs to society rise. And I think that relates to your example. The dependence on a small number of foreign actors also undermines Europe's strategic autonomy, and that is at stake at this point. My last point I want to mention as a problem is that finance has become too detached from people and planet, and that also relates to your example. We see that financial flows continue to support activities that deplete natural capital, while investment in transition and social infrastructure remains insufficient. We have learned from UN data that for every dollar that is invested in protecting nature, 30 goes to destroying it. In 2023, 7.3 trillion US dollars flowed into nature negative activities, varying from fossil fuel subsidies to investments in high impact sectors like utilities and energy. And meanwhile, only 220 billion supported nature-based solutions, with private finance contributing just 23 billion. So short-term incentives reinforce this problem. Risks that materialize over years, such as climate change, biodiversity loss, demographic trends, remain largely invisible on balance sheets. And this is not just an ethical failure. It poses also a material and existential threat. Ignoring ecological limits and social foundations distorts both values and risks. And over time, this weakens our economic stability, public trust, and the essential foundations necessary to support life. So this is the third problem. And I would like to emphasize that our vision is not about dismantling markets, but about redesigning them, like we have built our current system, but redesign them so that our public purpose and private initiatives reinforce each other and contribute to a resilient and competitive economy in which diversity, transparency, and accountability are essential as features of a financial system that serves people and planet. And at Triodos Bank, we believe we can contribute to that.
It's a fascinating topic when you think about it for a minute. The fact that in this journey of trying to contribute to system change, let's put it this way, in fact, you have the pioneers like yourself at Triodos, but you also have a role to play, let's say, more traditional financial players who can definitely have a role in reducing, not only pioneering and adding new innovative stuff, but also reducing the level of support that they provide to extractive activities, to financing, polluting, or distorting activities. It's one of those fields where wherever you are in the financial system, you can contribute if you get the vision. And I think, honestly, in the impact and change ecosystem, let's call it this way, there aren't that many people who emphasize the role of more traditional players who have definitely a responsibility, not asking them to totally reshuffle the way they think, but at least recognize that they could do less harm way quicker to help for the new economy, the regeneration that you're funding, etc., to thrive faster as well. So thank you for making it so clear. Next question. We're covering now the underlying logic of the system. You often argue, and you just said a minute ago, that finance needs stronger democratic guidance. So in your opinion, is the challenge today mainly about creating better financial actors, as we were discussing in a minute, or about redesigning the rules and incentives that shape the whole system?
So, of course, behavior matters. Institutions have responsibility. But we believe that even well-intentioned actors operate within a system that structurally rewards short-term risk-adjusted financial returns and undervalues long-term societal impact. And if we want to support long-term prosperity, we need stronger democratic guidance of markets. And that means redesigning incentives, redefining fiduciary duties, and being explicit about the societal goals finance should serve. And if you allow me to explain that in a bit more detail.
Please. I was about to ask a question. Can you give us examples, please, Marcel?
I hope I can serve you on this. So impact is often overlooked in a financial system focused on risk and return. And so, as an example, for years we have worked on enhancing transparency in investments. For example, through regulations such as SFDR, CSRD, and EU taxonomy. And the idea would be that transparency on impact would make sure that capital moves in the right direction. In all direct policy engagements, we have also worked and contributed to those policies. And now we conclude that transparency alone is not going to be enough. Because as long as risk and return instead of impact dominate the direction of finance, capital streams will not automatically shift. And that requires intentional redirection towards societally desirable goals, because financial markets are structurally wired to optimize for short-term risk-adjusted returns and not for long-term societal value. Moreover, regulation was too complex to execute, costing too much money and not delivering clarity to customers, and even leading to an uneven level playing field. Because, like we experienced, proving that you were not greenwashing required more energy than financing brown. Think of it. And if we want capital to move differently, we need to change the underlying incentives and rules of the system. So, in other words, the transition will not happen by better disclosure alone. It requires institutional reforms and willingness to guide markets towards outcomes that are aligned with long-term prosperity rather than short-term goals. And many instruments might fit in a guidance regime, as we call it. And we can also draw on inspiration from the past. Because, like I said, also at the Change Now conference, the French high-speed railway and energy system was built largely with private capital, directed towards these real economy investments by the Banking Control Commission that existed at that time. And we abandoned this kind of planning in Europe in the 80s, but today they fit the challenge we're up against. Look at the Danish. They have become Europe's leading producer of renewable energy through a form of planning, not purely public, not purely private, but a regime where both coordinate to solve societal challenges in a democratic process. And we can learn from these examples. India still guides private finance today. Through priority sector lending, the government ensures a sufficient flow of credit towards the sectors it deems key for development. Each financial institution to provide a minimum percentage of their financing to these sectors. And such credit floors might help us too. We can also use the power of our monetary authorities, such as our central banks. And we could, for instance, make the next round of long-term refinancing operations green. Rather than stimulating the economy, let's stimulate the green economy. And this is ultimately also sound risk management through precaution. Because if we do not redirect finance in time, then sustainability risks will grow only further, making the financial system more fragile later on.
And triggering possibly tipping points, and there's no turning back. So yes.
And the risk of climate collapse is a huge credit risk for the financial system. So let me be clear, we do believe that private financial markets can add value to society. Mobilizing capital at scale is something private actors excel at. That we all know and that we all experience. But we need to ensure that impact or societal value, if you will, is structurally embedded into these markets. And a guidance regime is not about making markets less free or less competitive. It's about recognizing that our financial markets today are just imperfect and that we need additional policy to ensure that our collective interests are supported by these markets. So think of it as competitive markets, but with a collectively determined guardrail.
Okay, next up, on the myths. So there are many myths around finance, although one may believe that finance is all about rationality, thinking in very serious and stark manner. So what do you think are the deepest assumptions or myths that still dominate mainstream finance? So assumptions that intelligent people, rational people, continue to believe even as reality increasingly contradicts them.
Yeah, I think you're totally right, Iman. There are a few deeply ingrained myths in the system. And one is the idea of perpetual growth in a finite system, as if ecological limits are externalities rather than physical realities, which is, of course, not the case. Another is efficiency over resilience. We optimize for short-term efficiency while systematically underinvesting in redundancy, diversity, and buffers. Exactly those things that make systems robust. And I think a third myth is that markets are neutral or apolitical, whereas in reality, every market outcome reflects choices about rules, power, and priorities.
Yes, a vision of society and how it should work, definitely.
Yes,
definitely.
And this is also a really important point we're making in our financial system vision. And another one, I think, and we talked about this together outside this podcast, closely related, is the belief that risk is fully measurable. We know together, you and I, that many of the biggest risks we face, like climate tipping points, ecosystem collapse, or social breakdown, cannot be neatly priced or modeled until it is too late. And maybe last but definitely not least, we still treat GDP as the ultimate measure of success, even though it tells us very little about well-being, resilience, or the health of the natural systems we depend on. And indeed, as you said, intelligent people believe these myths because they are deeply embedded in institutions, models, and incentive structures, and not because evidence supports them. So this is also something, we should call out on. And I'm happy that you asked this question.
Thank you, Marcel. I think there's a field in science called metacognition, which is thinking about how we think. And I think finance institutions and finance professionals could learn a thing or two when deep diving into metacognition, because it helps one question really common sense, things which have become reflexes or even intuition when really they're set and carved into a belief system which is totally contradictory with science. So, on a more positive note, because we need to be still determined and positive to keep moving. So what would success actually look like? If we projected ourselves 15 years forward, what concrete science would tell you that the financial system is generally, not just in surface, generally becoming regenerative rather than simply a greener or slightly less harmful?
Well, Iben, you talk about 50 years. You know we're in for a long run, maybe
I
longer
know.
than 50 years.
I wanted to sound positive. Okay, 100. But 15, it's, for people who are still already in places of power, they still have 15 years to go. Okay, so let's give them some ambition. Let's go.
Let's stick to the 15 years. I think success would show up very concretely. You would see capital flows flowing at scale into renewable energy, regenerative agriculture, nature restoration, social infrastructure and care, not as niche categories, but as mainstream investment priorities. You would also see financial institutions evaluated not only on profitability and stability, but also on their contribution to societal and ecological goals. For instance, through phasing out their fossil fuel exposure or financing the circular economy. Risk frameworks would explicitly include planetary boundaries and social foundations to break that myth, and markets would operate within clear democratic guardrails, rewarding long-term value creation rather than short-term extraction. Most importantly, people would once again recognize finance as a social activity, a collective tool for shaping the future we want to live in.
Next up, the tensions, lessons, and tools section. So, as you know, Marcel, every relationship in life in general, in business and in systems change, comes with tensions. So what's one challenge you faced navigating complexity, and how did you work through it?
One tension I constantly navigate is between urgency and patience.
Tell me about it.
The climate crisis demands speed. And at the same time, systems change demands time. And if you only optimize for speed, you break the trust.
Exactly.
And if you only optimize for consensus, nothing moves.
Exactly.
And this is also the case in our discussions within the bank and between its different factions, if you like. And what helps me is accepting that leadership is often about holding this tension and not resolving it. Naming it, making it explicit, and designing decisions that are directionally clear, even if they are not perfect. And what also helps to relieve the tension is that everything we do needs to fit in our beloved triangle that we use within Triodos of impact, risk, and return. We want to change finance, and change that is often urgently needed. But to do so in the long term, we'd also patience to come up with a solid plan within the modest risk profile that we have within the bank and striving for a fair return.
We have a section that I particularly like, which is about contrarian thoughts. Because believing that one can contribute to changing such a powerful system such as finance is a contrarian thought by design. So would you like to leave a statement, something that people should do less, your hot take, or the will you're willing to keep fighting for?
The hill I am willing to climb is also why I was at Change Now. I invite people to work with us and to rebuild a financial system that better serves our future. The financial system should serve the real economy, which in turn serves societies. And at its core, finance is a social technology that faces trust and exchange. And this asks for difficult decisions for us all. To give an example, a financial system that works for the climate will not look as efficient as the one we have built for extraction. But that is not a flaw.
That's such a powerful one. It won't look as efficient, as the extractive. Yeah, no, the question of efficiency versus robustness, questioning about the notion of performance and optimization. Fascinating topic again. Too many nuggets here, Marcel. Okay, last, our flash round. Big question, short answers, okay?
Okay,
So,
I'm
the
ready.
first one. A question you wish more investors or finance professionals would ask.
I really like the new tagline of our asset management activity, Triodos Investment Management. And they say, your investment strategy can shape a brighter future. But does it?
Okay, that could have been the provocative thought. Huh?
Absolutely.
Okay, that's a good one. Second, what did you take away from Change Now? And it can be an impression, an anecdote, an idea, anything you want to share.
Being new to Triodos, being in the role for 1 year now, I think what struck with me is a sense that the narrative is shifting from why change to how fast can we align. There is frustration, and I experienced it indeed, but there's also growing maturity. So it's less screen theater and more system level thinking.
What do you hope to see next year on Change Now? Because it's a partnership between ALAQA and Change Now. So what do you hope to see next?
Definitely more uncomfortable conversations between finance and real economy actors, less showcasing, and more co-design, less perfection, but also more honesty.
And finally, what gives you hope in the capital/climate space?
Without headlines. So cooperative models, regenerative businesses, patient capitals, the many examples I come across at Triodos Bank, system change through consistency. And that is what I see happening. We have an interesting point at this point in history with the Iran-US conflict. Europe has a unique opportunity to reshape our economy and to build a more autonomous continent.
So that gives you hope. Okay.
Yes.
Well, thank you. Thank you, Marcel.
It was an honor to be on your podcast.
Thank you for listening to ALAQA. If this conversation sparked something for you, share it, leave a review, and subscribe for more dialogues at the intersection of capital, systems, and transformation.